if someone is talking about tariffs and they aren't talking about the war on fentanyl or the war on illegal immigration, then they're being disingenuous, and they might actually be showing their bias unbeknown to themselves. So I've seen some headlines out there like tariff, tariff, tariff. These aren't trade war tariffs. This is a drug war.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Peranio.
Hey, it's KP coming to you live from Corona, California. Welcome to February. A lot going on. We're off to a rocking start in January as a industry, and it was really great to recap with everyone in Austin at the IMB. Some good vibes going into the spring purchase season. And it will start to kick off here shortly. So a lot to talk about, tons of news. What is the first thing that comes to mind right now with all the news and everything that's been going on? Was it the Luka to the Lakers trade? As a Mavericks fan, I was in initial shock, but the more I think about it, the more I kind of like it. I don't know. We'll see. Everyone has reactions and preconceived notions, and then there's the reality as like math, facts, science, data, and everything comes out. A lot of people don't really know what to expect in 2025. I'm seeing a lot of comments online about what they think is going to happen or what should happen, and I promise you, absolutely nobody had any idea how this tariff thing would go down over the weekend. And it did impact mortgage rates briefly, but it pretty much traded sideways. And so for now, it is a nothing burger, but I'll get into that, and I'll get into a lot of stuff. I mean, I have the tickets, by the way, to the Mavericks-Lakers game when they face off later on the 25th. So I'll be taking my 11-year-old daughter, who scored 2 soccer goals yesterday in her State Cup 3-game group play this weekend, and they got into the next round on goal differential, so what she did mattered. So, okay, housing news real quick before I get into some of the meaty stuff that everyone gets all emotionally triggered about. We knew that existing home sales and new home sales were up slightly, but existing home sales is the lowest it's been in years from a number. So it's like 4.1 million existing homes. There is a lock-in effect. We all know it. And consumers no longer expect rates to come down in some of those surveys that are out there. So we'll see. We'll see what happens to rates. Obviously, all these macro effects rates. One big one is the biggest one. The biggest driver of inflation, at least, is government spending. And there's no real details yet on the continuing resolution that will need to be renegotiated by March 15th, which is not that far away. I mean, it's right around when the Fed meeting is the next Fed meeting. But there is the quarterly Treasury refunding announcement. So basically the Treasury said, well, the estimates for borrowing this quarter are more modest than expected. And the reason why is because the Treasury is actually flush with cash. They have like $600 billion in cash on the Fed's balance sheet, or the Treasury's balance sheet. We have tax season coming up, so there are anticipated revenues coming in from that. I'm not really counting any tariff revenue, but again, I'm saving that, so I'm not going to ignore that today. We're going to get into it, but by the end of the day on Wednesday, we'll have some more information on, which coupons, how much of the yield curve, notes and bonds and bills would be sold to fund our $10 trillion of treasuries that will likely be coming on the market this year. So far, auctions have been mixed, some good, some bad. Now, since about June, the M2 money supply actually expanded all the way up through the end of the year by about 15%. Although we're in quantitative tightening. Well, the reason why is because our government spent a tremendous amount of money last year. So just under $7 trillion all in for the budget. Now, we are already a full quarter into the fiscal year, which I believe starts in October for our nation. And we spent some crazy amount, like something like a few trillion, I believe. I think the number is 4 trillion, but don't quote me on that. Entitlements, fixed payments, those are things that have long-term issues that need to be addressed. Now, before I get into the stuff that everyone's talking about, I will talk about the housing market. So a few weeks ago in my videos, I read a very interesting article from Kate Berry, who I absolutely cherish. She's one of the best journalists in our business. And she mentioned that the Trump administration, the first time his playbook was to have an acting director of the CFPB. She just mentioned that in fact, and I brought that up on my video. Well, that's what happened today. So Treasury Secretary Scott Bessent, it will now be the acting CFPB director. Now, I read an article last week that said that Vice President J.D. Vance was meeting with Rohit Chopra from the CFPB, and in the article it said maybe there's a possibility that he stays. And so I mentioned that on my video on Friday, which I waited till Friday because the PCE, which was as expected. Fed meeting, nothing burger, as expected. Labor, all right, we're all good. It is Jobs Week. Jobs Week starts tomorrow. Job openings, big deal. JOLTS report, quit, turnover. People aren't quitting as much, but they aren't being fired as much. But if they somehow don't have a job, it's harder to find a job. And we'll take a look at that ADP report, BLS, Bureau of Labor Statistics jobs report on Friday. Expected to be 170,000, which has been about the average. So the unemployment rate is expected to stay the same at about 4.1%. So we'll see about all that. But, the acting role of a department head from the playbook of the first Trump administration is what's playing out with the CFPB, who then ordered today, hey, everyone at CFPB, stop doing everything. So who knows how that's going to play out. We had our weekly, executive call, MBA call this morning over all kinds of things. These changes are coming fast and furious. Today's day one of week 3. So we've had 2 full weeks, and a lot went on. So that was a big deal for housing, and more to come there. Now, the tariff talk, okay? So just my observation, trying to be completely factual. If someone is talking about tariffs and they aren't talking about the war on fentanyl or the war on illegal immigration, then they're being disingenuous, and they might actually be showing their bias unbeknown to themselves. So I've seen some headlines out there like tariff, tariff, tariff. These aren't trade war tariffs. This is a drug war, and I just happened to look up something, so I'll show it to you, and it's probably in reverse here. Maybe I can. So this is the actual thing, right? So the very first sentence. I hit my keyboard here. It says the extraordinary. We are addressing an emergency situation. The extraordinary threat posed. Sorry, I had something in my mouth. The extraordinary threat posed by illegal aliens and drugs, including deadly fentanyl, constitutes a national emergency under the IEEPA. Okay, so it's a drug war. This is a war on drugs. Yes, I know there's the demand problem and there's all this. I mean, I get it. I get it. Like, everyone has all these excuses to say why it's dumb. We're doing something. Okay, so I know people who have family members that have died of fentanyl overdoses. You would pay every penny on the planet for that not to happen. If you lost your home in a wildfire, you would pay every penny on the planet to have water in your fire hydrants or insurance. And so this is a war on drugs. And the tariffs were used as a tool to gain leverage against great trading partners. And they both came to the table today. Both leaders came to the table today. Sheinbaum from Mexico and Trudeau from Canada. And they pledged resources to help in this war on drugs. There's like a 10% tariff on energy, which we get 4 million barrels of oil a day from Canada, which, by the way, they have nowhere to store it. Like, if we just said, sorry, we're not taking your stuff, like, where are they going to store it? It would be a disaster over there for them. So they're pledging over $1 billion to help secure their border. And, of course, Trump, he quipped on Twitter or X or True Social, which I'm not on. He said something about, busting those meth labs, right? Mexico is sending 10,000 troops to the border. Yeah, I know they're going to be bribed by cartels. I hear it's like they're sending troops like in a day, like literally from the weekend. Like 2 leaders of our major trading partners are doing something. They're not doing nothing, right? So Trump's saying bring rates down immediately. That's not going to have a zero impact and influence against the Fed. And so, it's just let some of the stuff play out, okay? And today was a win for our country, and we got a lot done in the last 2 weeks. We'll see how it plays out. I'm glad I don't have to go hoard avocados and make fresh guacamole for the Super Bowl party this weekend when I watch the Chiefs three-peat against my Cowboys division rivals, the Eagles. And the tequila costs going up as well. It was nice to see maybe for now, 1 month, but who knows? Trump may move the goalpost. And, there's definitely some uncertainty. There was a big snoozer in the bond market. Traded sideways, mortgage interest rates traded sideways. Stock market started to go down on Friday, opened up down, then rebounded back up. So, we'll keep an eye on all these things. Tariffs are being used as a tool. Now, the one on China is a little bit more of a longer play. Now, if you look at the first administration, Trump had and levied tariffs as a policy to keep China from dumping steel on us. Now, I saw a 60-minute clip that got sent to me through my algorithm. I don't watch TV, but Scott Pelley, who was at the NBA's event, I believe last year, as a guest speaker, was awesome. He interviewed the guy who's in charge of tariffs, the first Trump administration, who's now just an advisor for Trump of this administration. And, he said tariffs are just one part of a comprehensive policy, right? There's tax cuts, which you can all debate. We can all debate. There's growing GDP. There's deregulation. There's DOGE, which, of course, you can, if you hate Trump, then you probably hate Elon, although he's built like 4 of the most amazing companies that, like, out of nowhere that have, like, literally exist on our planet. Who, by the way, both those guys were like liberal Democrats their entire life. And suddenly they're, these pro-business people that, were taking over the Republican Party. And not even the entire Republican Party. And not even all conservatives fully align with both those guys. So let's just keep all the politics out of it and continue to exercise some emotional intelligence. My good friend Steve Scanlon said, like, emotional intelligence is like the ability to hold 2 diametrically opposed ideas in your head at the same time without your head exploding like the movie Scanners. That's not exactly what he said, but something like that. So we're going to see how it all plays out. And I'm positive, which is the only way to roll, and trying not to be a negative person online here and just display the facts. So what else is happening? There was a shooting on Newport Pier. A guy in Menifee shot a lady at 2:45 a.m. Saturday morning, after midnight on Friday, and then was spotted by the Santa Ana police in a car chase at 6 a.m. in the morning, Friday morning, and then made his way all the way to the Newport Pier, which you guys have seen me film from there, and I've been there many times. I text my buddy Sean, who's in from out of town, who's in from New Jersey. He's staying down there on 15th Street. I'm like, dude, there's a shooting. He's like, I know, I'm here eating breakfast. I'm getting all the alerts from the police. You can check it out, see the videos. Anyway, the police chase ended with the guy driving on to the pier. And my friends from Texas said he should just drove off the pier. The cops got out judge, jury, and executioner from Santa Ana police, and they just smoked this dude, blew him away, like crazy. We had a horrific plane and helicopter crash in D.C. over the Potomac last week. We had these wildfires. Luca got traded. I am trying to process it all just like all of you. But you know what? We just keep on moving forward with some emotional intelligence. We're going to keep ourselves at a 6, not a level 10, and we're going to keep doing loans and make things happen. By the way, the tariff thing is obviously not over, but it was very quick. And Scott Pelley from 60 Minutes, what he said is the ultimate impact from Trump 1 administration was that the net jobs created was a net loss for America, at least as it related to steel. And but this isn't a trade war on an industry like it was then. This is currently being used to leverage for the drug issue. And fentanyl is a real problem. 100,000 people, 100,000 Americans die a year over fentanyl overdose. I don't think everyone goes out and gets drugs because the drug demand, again, I hear that issue, but I don't think they go out going, I want the stuff that kills me on one dose. I've seen the pictures of the Skittles and the things that look like, look out for this. Thank God my oldest is just a sixth grader, but, people pop pills and they think they're just having a normal painkiller or something like that. I don't do drugs, zero drugs, just drinks every now and then. And, you die over it. So it's a big deal to wage this war. The sovereign wealth fund that Trump just created may be an absolute game changer, and that could create wealth. There's a $1.7 trillion Norwegian sovereign wealth fund where everyone in Norway is worth like $323,000 a person. Whew, that is the big thing that no one's talking about. Comments down below. Cheers. Hey, it's KP coming to you live from Corona, California. Well, we just wrapped up our sales rally today for the retail channel, and the TPO channels are tomorrow. But enough about that. It was awesome. It was great. But some humongous news happened today and had to do with the quarterly refunding announcement from the Department of Treasury. Now, this is Jobs Week. And Jobs Week, remember, labor over inflation. We heard our good friend Logan Motoshami, lead analyst who uses charts and math and science and data and facts and a calm, level head to look at everything. And that data is big. It's what the Fed is looking at. Inflation seems to be pretty tame, and there's more evidence of that. Remember, the biggest driver of inflation is really the U.S. government spending. So that quarterly refunding announcement was massive, and I'll get into the details in a second. But on the jobs front, jobs claims comes out, weekly jobs claims comes out every Thursday, and the continuing claims number, it's like a running, 4-week average, if you will. Last week, 1.9 million jobs were continuing to be a jobless claim. So that means it's harder for people to find a job once they lose a job. Now, we know that's the case because the U6 unemployment rate, remember, that's pretty much anyone looking for work or gave up looking for work or part-time looking for work or disenfranchised or officially making claims but then unemployed, all of it, the whole workforce. About as good a number as we can get. We're at 7.5%. So the Bureau of Labor Statistics puts that number out. I could show you the graph here, but I'm trying to use, instead of my phone like I did on the last video where the audio wasn't great, which is so much easier to upload one shot, it's done, I'm using my computer. And sometimes LinkedIn webpage gives me some crap, so pray for me. We got people waiting at the bar next door that want to hang out. So you can go to, you can look it up. There's Fred, BLS, there's all kinds of data. You can see the U6 unemployment rate is different than the U3 or the U4 or the U1. There's tons of it. So the ADP job report came out today, and it was actually higher than anticipated. And I'll get into the numbers here in a second because I want to make a point about worker productivity. But normally when there is a jobs beat on ADP, which is not as top tier data point, it's great, but not like the Bureau of Labor Statistics, which is more comprehensive across the country. Plus they rebalance their numbers with death rate modeling and all the states, when the states finally give the information back from, say, 2024 and go, well, here's what employers paid for. So it's a longer number to get. ADP is more private payrolls, but still very important. And I'll break that down in just a second. Job opening, labor turnover, that came out yesterday. The job opening number went down. I think that number went down to like 7.4 million. Down from it was at 8 million just like a month ago. So there's less job openings. People who lose jobs are staying out of work longer. And we have a model change to the Bureau of Labor Statistics jobs report that comes out on Friday for the month of January, which is really the second half of December and the first half of January. So as we know, Q1 is typically the winter, colder, darker, shorter days, although they've been getting longer since December 26th. But there is less hiring and more firing that tends to go on in Q1, just typically. It's like a seasonal trend, unless, of course, there's something going on that's exogenous. So jobs week, still important, very important. However, even with the ADP jobs beat today, the quarterly refunding announcement, okay, so this is a new Treasury Secretary appointed by the Trump administration, Scott Bessent, who also was appointed this week as the acting CFPB director, which he could be acting there for 210 days. And then the Trump administration could then appoint another CFPB director. I did call that out on one of my videos not just a few weeks ago because Kate Berry, which I mentioned, just want to give her some more credit. She pointed out that Mick Mulvaney in the prior Trump administration was the OMB director and chief of staff, and then was appointed
acting director of the CFPB to get rid of Richard Cordray, and then Kathy Kraninger was put in place as a permanent CFPB director within the 210-day window of the acting director. So we'll see who the next CFPB director is. We know that they've taken a pause, stopped all the work that was announced this week. They'll probably say, hey, look, we took over this department. We took over this government. We took over all these things. We need to, inspect what we expect. We need to look at what's going on here. And that's not a knock on anything the CFPB is doing. Just there's a new administration. They want to know what's going on and start to put their stamp on things. And so, I think calmer heads will prevail. Everything seems to be less than feared. Okay. I read a pretty funny email from TMS Spotlight. Seth, Les Parker, he does a great thing. He's like talking about, before the tariff clock struck midnight on Tuesday, all the fears about tariffs were done. I thought it was a great way to put it. Now China did retaliate, but we've been in a trade war with China like forever. We had tariffs the last 4 years. Remember TikTok, chip control, I can go on and on. So we're always in a trade war to some extent with China, and so we constantly, each nation tries to look for balance or imbalance. It's not great that they're tariffing tungsten, which is a rare earth element that we really need. They're going to do a probe on Google. They talked about, putting some tariffs on, appliances and some knickknacks and stuff like that. So we'll see how it all shakes out. That is the only one, in my opinion, that could spiral into a trade war. However, we only have a 1 month pause between Canada and Mexico in this drug war with a tariff tool being used. And so could that spiral into a trade war? Possibly. So having said that, again, the quarterly refunding Treasury announcement by the new administration put in by Trump, Scott Bessent, came out today in lowered rates. Rates were lowered today by the actions of the Trump administration. And so you don't believe me? Of course you don't if you don't like him, but this is the math and the science and the data and the facts. The Treasury said that the amount of treasuries for the next quarter and the next several quarters are going to remain about the same as what they've been. That was a sigh of relief for the bond market to know that the $9.2 trillion in treasuries that need to be absorbed by the market, by all these banks, without the help of the Fed, by the way, who's still doing quantitative tightening by running off their balance sheet. That was a sign of relief. Did anyone see the 10-year Treasury immediately when those announcements were made? It was a massive move. It was a massive move down. The 30-year came down. The 30-year long bond has come down 30 basis points in 25 days. And it went up 100 basis points up to that point, up until January 10th, stemming from, December or whenever it was, when everything started going crazy. The 2-year Treasury is at 4.19. If it gets below 4, that gives the green light for the Fed to cut the Fed funds rate another quarter, because right now they're at between 425 and 450, call it 4.375. If they get the 2-year Treasury gets down to 4, then a quarter basis point cut of the Fed funds rate will get us at 4 to 425, which is 4 1/8. So the Fed funds rate is above market rate and still restricted because it's above the 2-year Treasury. Mortgage rates come down when the yield on the 10-year Treasury comes down, which it's down at 442. Now, I'm not spiking the football down. I'm just saying these are direct actions directly correlated to lowering mortgage interest rates. And there are many tools yet to come through. So we're going to watch this stuff and give credit where it's due. And the Treasury refunding announcement was a massive win for mortgage rates, started by the Treasury Secretary, Scott Bessent. So thank you. All right. So what are some other things that we don't know about? I could talk about deportations, but I don't want to trigger anybody. So let's go into the ISM Natural Manufacturing Index that came out. For the first time in 26 months, manufacturing index went above 50. We were positive territory. Now, that was interesting because on the ADP report today, it was the only sector, manufacturing, that saw job losses on the January ADP report. So why is it that manufacturing ISM index went up? Well, part of that was more orders coming through, maybe likely ahead of a fear of a tariff and the prices of things that are manufactured going up. But we have good worker productivity. So I'll get into that. By the way, the December jobs opening number was 7.6 million. So I want to correct myself because sometimes I shoot off the cuff here. So ADP, okay, All 11 sectors other than manufacturing drove the headline strength to 183,000, which was above the 150,000 median expectation, and also well above 176,000 jobs created in December. So again, we'll be watching the weekly jobs claims tomorrow, and then of course the BLS number on Friday. Big deal. Okay, our secret sauce in America is worker productivity. That's a big deal. Why? Because we're doing more with less. And that's, if people are afraid that they can't find a new job because people aren't finding a new job when they lose their job, then they're going to work their ass off to keep the job they have. And that showed up also in the report today that showed that people are still getting more of a pay raise and wage increase if they're a job stayer, as opposed to being a job switcher. Now, that was not the case during COVID when labor was shortage. So now 1.1 jobs are open for every person looking for work. It was at 2. So imagine being like, screw you, boss. I don't need to work for you. I go over here and ask for more money. And it happened. It's not happening as much anymore. People who stay and who are loyal, like all of our dozens of 10-year employees. We had a 20-year employee recognized today. Thank you. And thank you to all of you out there who are loyal to your companies. It's hard in this business to stick around because it's such a tough business at times. But we are doing more with less. And AI hasn't even jumped in here. I'm not a financial advisor. I'm not responsible for your losses, only your profits. Anybody follow me on Palantir? Anybody get a 10-bagger? 10-bagger. It's unbelievable. So I still think it's going to run, but I want to see a pullback before I get back in. Not a tip, just telling you, just for informational purposes only. Those are all my legalese. Let's go. Third quarter was the 5th straight quarter of worker productivity. That's impressive. I mean, we are the place. This is in credit to the Biden administration. I mean, for whatever stuff they were doing or not doing, the economy was in decent footing coming in. So imagine where we can go from here. Les Parker, TMS Spotlight, talked about Chinese consumption as a share of GDP. It's abnormally low. I mean, it's unbelievable. U.S.'s consumption as a share of GDP, it's high. So, our consumers are still spending. Some of that last month was maybe pulling ahead some purchases in fear of tariffs, raising prices or whatnot. But our consumers are spending. We're actually saving went up just a smidge, not as much as consumption, but the consumer's in a good spot for now. And of course, if you're in the stock market or if you're a homeowner, you feel rich on paper because you see what's going on. You never go broke taking a profit. I love that from Jim Cramer at Mad Money. Been watching him since '99 with my dad. Used to do that. So it's okay to take some profit on some stocks, just saying. Okay. Americans, our quarterly productivity of the U.S. worker has grown at least 2% compared with the year earlier, and we're up 2.1% over the last 5 years, which is a sharp improvement from the 10 years prior. So we are rocking. Okay, it's a very long video. I could get into a lot more stuff. I don't want to do it because I'm going to do another video on Friday. Had such huge engagement on my Monday video. It's a busy week. There's so much coming at us, fast and furious. Let's all continue to just digest it, look at it, think of it through the prism of math, science, data, and facts. I'm trying not to be overly emotional and use emotional intelligence, which, by the way, Jason Abell from Rewire spoke today at our retail sales rally, and he'll be doing another one tomorrow at the TPO sales rally. So thank you, Steve. Thank you, Jason. We are going to try to work on our mindset this year. I need to take more cold plunges and cold showers, apparently, is what I need to do, and get better sleep. I went to bed at 8:30 p.m. last night. I slept until 7 a.m. I had no alcohol. I didn't eat for 24 hours. I feel amazing. I'm on to something here. 2025. Let's go. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Peranio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.